Okay, folks, we are Monday the 14th, and we are back here with the in-house high performance psychologist, and I am about to get put over the coals. So, welcome back to Create It. How are you?
I'm very good, thanks, Tim. I'm very much looking forward to doing some psychoanalyzing on you. No, I'll go easy on you. I'm joking.
So last week we kind of started to touch into some of the real stuff that goes on when it comes to trading psychology or high performance psychology. And this is going to be, I think this is probably going to be the part that a lot of people don't realize goes on, and what a lot of people don't actually get to see and hear about what's going on when, say, someone who's in a high performance space is working with someone like Craig on high performance psychology. So, I mean, do you find that sort of common as well?
Yeah, absolutely. Like I find that there's different groups of traders. So there's some traders who don't kind of understand or buy into the importance of psychology at all. And then there's people who kind of do. They understand that it's probably helpful if they worked on it, but it seems so nebulous and abstract that it can seem like it's therapy, or so they don't really open the door on it. So what I'd love to do here is give people a taste of what it's like to actually work with a high performance coach, because it's very different to therapy. It is about self-awareness and, putting strategies in place. But what we're doing is trying to optimize every level of performance. So you don't necessarily need to have something going wrong to work on the mental aspects of your trading. And this is why what you're going to speak about is a great example, because you've already found a strategy that's working, but we're going to optimize it today. So maybe you want to
Yeah,
talk more about that specific area.
yeah. Well, before you dissect my brain here now, we were having a chat before we started recording about uh, a conversation with a trader that I was having a while ago, sort of a junior trader, about working with a high performance psychologist on their trading performance. And they were a little bit close to the concept. And I was trying to get across that it's not, any sort of therapy like this, it's not where you have a car that has an oil leak and you just need it fixed. It's not like that. It's more like you're trying to grow and expand your awareness, really, of how your mind is working and how it actually is. Sometimes you don't feel like it, but subconscious items are completely operating, all the clicking and all the actions that you do, but yet there's this smarter sort of self too, if you like, if you want to go back to the psychology of tennis, or what's that book called?
The inner game
Mind
of
one,
tennis.
mind inner game of
Yeah.
tennis. Yeah, it's like yourself two is actually kind of put in the background, and then the self one kind of takes over, and you're like, hold on, why did I do that? I don't want to do that. So, but anyway, yeah. So let's get into it.
Okay, so let's set the scene. And so, just in case anyone missed the video last week, we were talking about a specific part of your trading where you had put a strategy in place. I'm going to leave it to you to explain the details, but basically, you'd put a strategy in place that's working for you. And I was saying there's actually a way to optimize that so it's not as painful or uncomfortable. Like there's a strategy that we could shift it a little bit to kind of improve what you're doing a couple of percent. So maybe you want to talk us through the issue that you were facing, and your current way of dealing with it. And then I can explain, what in theory you're doing, if that makes sense.
Yeah. So, and this kind of has a long background, sort of a backstory as a problem as a trader that I used to have. So, um, when when I was trading in prop with two different firms, it was very much sort of small position trades where you're really looking to take a small piece out of the market over momentum or over a quiet period, or just kind of manipulate or taking advantage of a certain situation in the market. And you're really looking, to take a very small nip, not to be a hero and buy the low, sell the high, or anything like that. And I think I really didn't have many problems at all in having those positions come against me and just cutting out. Okay, and because I simply knew that I wouldn't, my P&L wouldn't survive a week if I didn't obey that sort of strategy. Okay, but then I kind of got into, I was working with another firm out of Australia, And the strategy there was I was trading the energy part of an overall book. And actually the book was really focused on bonds and energy. And well, bonds primarily, and then I was sort of hedging off with a little bit of oil and euro. And there was a strategy at play there where if the market was coming against me, I was actually authorized to scale in to what's called martingale in, so averaging down, which is pretty much the most toxic thing you could do as a trader. But you know, if you have start off with small positioning and it comes against you and you're just tearing in small amounts, like 1 or 2 contracts and then 1 or 2 contracts, invariably you can survive like a 3% swing, negative 3% swing on the day on oil. And then when the move is kind of abating a little bit, you can get out on a quite a small little move backwards in your direction because you have a much lower average price. And so it just takes a very small retracement for you to then be able to make quite a lot of money or to be able to just average out of the position very easily. And so this then, because that was actually part of the strategy, because we kind of needed to scale into, it was kind of like a mean reversion type of strategy, basically. This sort of introduced this toxic behavior into my trading, and that suddenly it became okay to hold something coming against me. And for about 6 months after that, I noticed it was really hard for me to step back out of that. When I was trading in my own book and trading, another person's book as well, it was very hard for me to like step out of that. And added to that as well, I was also learning how to really hold trades a lot longer. So now where we've come to is that I only hold trades for a long time if they are on side. Okay. I will never average into something that goes 40 ticks off my initial entry. Okay. These sorts of practices are the actual mechanical things I do. But when something is maybe coming against me and I'm scaling in for the last time and it's like 5 ticks off of my limit where I just puke, I'm now starting to recall the really stressful situations where I might have oil coming again. I'm offside by like maybe 50, 80, 90 cents or $1 on oil. And it's a really seriously stressful situation. To now I recall how stressful that is. And I pull back all of those memories. And it happens in literally the thought process happens in probably 1.5 seconds, maybe 2 seconds, where I'm just like, if I have a flash of oh, maybe I'll tear in and widen the stop a little bit, then instantly I'll be like, no, you've been there, you've done that, you've bought the t-shirt. And if I do that, I'm now locking myself into what could potentially be another 6 hours of having to massage my position in this market. And every minute of those 6 hours is going to be absolutely just painful and stressful. And I'm going to have a horrible day. So I kind of, when I talk about it, I say that I relate it to a nauseous feeling, to kind of a seasick type of feeling. But in reality, that's just a summary of kind of what that whole experience can feel like when you are averaging into a market that's coming against you. And there is no, you don't have a point where you're just going to say, okay, I'm definitely out here. You just don't have that point. And so that's kind of a coping mechanism and a strategic tool that I use whenever, that little voice comes out of the back of my head and goes, hold on, you know how to do this, Tim. You know what you're doing. You know where this market will come into support, and you can average into that and then just get a little relief rally and you're out. As soon as that little voice starts popping up in my head, I just, in a flash, I go, no, I know what that's going to be like. It's going to be 6 hours of pain. and I'm putting a huge amount of money at risk. I'm putting like 10% at risk on the book, all for what? So I just go bang, I'm out, you know. And so that's kind of what it does.
So that's, I love the amount of detail in that example. And there's a couple of things before we start reworking it. There's a couple of things just to point out. So one is that what you've described is really good in terms of you went from trading one way to trading a different way when you were required, and now you're trading a different way again. So that's something really important for people to understand, is that when you change your strategy or change your firm or whatever, then you need to be able to adapt your psychology to the new way of trading. So you were really successfully able to do that from when you went from the first firm to the second firm, and you have successfully done that when you've moved back to, you know, trading your own capital. But the piece that I was pointing out could be optimized is that you're basically traumatizing yourself a little bit each time that you have to rely on that strategy. So it does work.
Yeah.
You know, it's a good, like, you've created a kind of band-aid strategy that is working. And the reason it's working is when you're in that state. So when you're other self, that subconscious self, is coming in and telling you to know, like, you know how to do this, you could really make some money here, and it's at odds with what your conscious mind and your trading plan is saying. What's happening is that because your subconscious mind it controls 95% of your behavior, so it's more powerful, so it's always going to win. And if you do nothing to interject in that kind of automatic pathway, then your subconscious will win, and the action that you'll take is you're averaging down. You know, you're doing exactly what you don't want to do. So what you've done is you've disrupted that automatic pathway between your subconscious mind saying, let's do this, and then you actually taking the action. You've managed to break that by bringing your conscious awareness to it. But the way that you're bringing your conscious awareness is by remembering pain and the consequences. And like you say, that's actually making you, kind of putting you in this nauseous state. So the theory of what you're doing is right. You're disrupting it, and that allows you to actually gain control, so that it's not your subconscious mind running the show, it's your conscious mind and your trading plan. So you're getting back in control, which means that the results are, you know, good as you want them to be. But the problem is that it leaves you, the person, in a kind of I'm going to say traumatized. I'm meaning that, you know, in a that's probably exaggerating the state, but it is an uncomfortable state to be in. Maybe you could just speak to me about what it's like to put yourself in that mode, to use that strategy. Like, does it make you feel uncomfortable, or what happens?
Certainly it recalls, I mean, now, you know, it recalls just a little sliver of, I don't know, I think anguish is just the best word to sum it all up. Like, I think for a lot of traders, you know, junior to senior, as in, you know, you've been trading for 3 months, you've been trading for 2 years. We've all experienced, you know, averaging into something, and it just keeps dipping against you, for example. Okay. And I don't think anyone recalls that. I remember saying to actually Will DeLucy a couple of years ago, we were talking about something like this, you know, on trading psychology. And I was like, I think I remember saying, you know, I don't really remember any of the big trades, you know, the hero type of trades, or the really, really, you know, awesome trades. But I always, in clear, precise detail, remember the worst trades I've ever done, because you're, you know, when you're in good trades, you're calm, you're relaxed, it's happy thoughts. There's no adrenaline really running through your body. But when you're in really bad positions and you're putting on more risk than you should, your adrenaline's running, you're fidgety, you're prone to confirmation bias big time. Of, you know, I'll read anything, you know, if the dog walking past the door wants to tell me that's a good position, I'll sit down and listen to him. You know, that's the thing about confirmation bias when you're in a drawdown. But the point is because it's a heightened situation, you remember every detail, every detail. You know, what was being talked on Bloomberg? What did the squawk say at this point? What did I do after that happened? You know, everything. And so, yeah, to answer your question, it you know, now when I implement that sort of psychological little step, it's just like taking a breath in a way. but it does have a sliver of all of that anguish, you know, and that's what clicks the button for me. That's exactly what motivates me, is that sliver, that little knife cut, you know.
And so it is working, but would be fair to say that if you could do that, if you could disrupt that automatic pathway and not have to traumatize yourself, like not have to put yourself back in that emotional state and remember those failures or the negative consequences, if you could achieve that end without putting yourself in that state, would that be a better way? Would that be optimizing this technique?
Yeah, I think, yeah, absolutely, because it just, yeah, as you're getting to it, just recalls really bad stuff, you know.
Because if we think there's a technique, like a mental training technique that I'm sure lots of people have heard about, which is using mental imagery to improve performance. But what you're doing there, it's very powerful because you basically put yourself in the emotional state that you would like to be in. So you can imagine yourself, for example, having a completely perfect trading day, and people create a script for it, and they really evoke all of this imagery and the feelings that would be associated with that. And that's proven. There's a lot of scientific research behind it that can help you increase your performance. But what you're doing is the opposite. So you're using this really powerful tool of imagery, but you're actually using it in the negative way. And it is helping, like it's getting you to the results that you want, but it's also, when you're remembering those images and those memories, your whole body is experiencing that adrenaline and that kind of anguish, the nausea, all of that. It's priming that state in your body. So that's pretty tiring. Out of even if you're getting the results that you want, even if you're sticking to your trading plan, it's using up emotional capital because it's stressful to put yourself in that state, and you possibly don't need to. If we can find a better way to do the same thing, then you can remove that level of drain on your emotional capital.
Yeah. And I think from mentoring, you know, I don't know, I've mentored like 50 traders or something now, maybe more. From mentoring traders, you know, and when they train with the firm and with us, you know, they really go through between 4 weeks and 3 months of no cash. And what I've seen before, and actually one of our best traders in the room at the moment, I won't name names, but he had a shocker. His first day going to live cash coming out of training was an absolute shocker. And we got in a call halfway through the session, and I was like, "Are you all right?" And he's like, "Oh man," he's like, "I don't know what I did, but it wasn't the same person who'd been doing the training for the last 3 months." I was like, he's just like, "I don't know what happened. I wasn't applying anything I'd learned or taught or been using on the same for 2 weeks." He's like, I just don't know what happened. And to bring it back to this is like, I think it's because of that negative association that people have. They find it very hard going from sim to cash. And then when they go, you know, good performance on sim, terrible on cash. And then when they go back to sim, they're Paul Tudor Jones. And then when they go back to cash, it's not working. And I think there's something there. There's a bridge there that needs to be mended, I think, psychologically for traders. And, you know, I think that's really interesting in a way, I think.
So what's happening when people are trading differently on sim to trading live is the pressure is, like, obviously there's more pressure when it's your own money or you're trading someone else's money, as opposed to just, you know, being sim. So pressure actually changes the way that our minds process information, our decision making, and all of that. So when you're dialing up the pressure, you're also increasing the likelihood that your subconscious mind is going to take over. And this really is the theme of what we're talking about. Even if we're talking about different aspects of it, the crux is that your subconscious mind in a specific situation is trying to take over, and you're trying to fight with it currently to keep your conscious mind on top. And it's the same for these traders when they're trading on sim and then they go trading live and it falls to pieces. Their subconscious mind and the pressure are taking over, and they're not able to retain the same level of performance. So I guess what we'll speak about now in terms of the fix would also be useful for people in that situation. And this image is coming to me to explain it in this way, and I by no means am comparing you to a dog. So just I'm going to preface that before I say this. But if we think of in sort of mainstream psychology with Pavlov's dogs, so psychologist who was investigating, you know, learned responses and learned behaviors and conditioning. So how do we condition a behavior? If it's like in one scenario here, it's like the dog is being smacked on the nose. When you're when you want to get out of a trade, but your subconscious mind is saying stay in, you're smacking yourself on the nose and you're hurting yourself in order to condition the behavior of, you know, sticking to your plan. And it's working. But it's better if you could condition yourself with just some sort of cue that is not positive or negative. It's just it's just a cue that you listen to, and then you actually affect the behavior. So for example, if, I don't know, someone blows a whistle and a dog does what they wanted to do, that's much better than smacking it on the nose. Because so we're talking about conditioning, but in order to be able to overcome your subconscious,
this is very sexist already. This will not pass the woke brigade test.
Oh, well, I'm pulling from mainstream psychology, so hopefully it's fair enough. Don't blame me, blame the research. But it's just the simplest way I can explain it. So, but let's talk about how we can optimize this for you. So what's happening is there's some part of your subconscious mind is creating the urge to stay in the trade. And if you can crack what is that, like what belief is that, and we'll keep it general enough, so we're not going to obviously pull apart the depths of your psyche on this call, but we can do it in themes. So it could be something around money mindset. It could be that you're focused on, you know, wanting to make as much money as possible in as short amount of time as possible. And that's stemming from a money mindset belief. So it could be a belief around, you know, I never have enough money. I need to, and these are all common ones. So I'm pulling these from examples from like working with tons and tons of traders, and these are the common ones that come up. So this is not specific to you. I'm just throwing out what usually occurs in this situation. So it could be that, and that money mindset belief is taking over and causing you to override your trading plan and want to stay in, or at least creating the urge, because you have a fix for it at the moment. But the urge is what's there. It's the urge that we're trying to neutralize. So if we
just to come in there as well, that's really important. What you said there is that sticking to the trading plan, because in that sort of, I don't want to say toxic strategy, it is a verified strategy. I know quite a few traders who use that mean reversion strategy, and it's a total cash machine for them and their firms, and you know it's fine. But there is a plan that you have to have if you're going to be martingaling into moves on these big beefy products. But there's a plan there for it. And when I was trading that strategy, there was a very distinct plan in place. Even though we're martingaling in, there was risk spread on the other side of the book as well. We had the euro in the mix as well. So there's a very sort of detailed correlated plan going on there. But the point is even though it was quite difficult to psychologically hold that plan, coming from a position trader where you're not going to let things go offside like that, we still stuck to the plan. And so there's, you know, you have to adjust your psychology. And so for me, it was like a bit of a Zoolander moment where I could only turn right, I couldn't turn left. You know, it was like, right, well, coming back out of that, back into position and scalping, it was, I found it really hard to kind of hang up that whole psychology that went along with that plan. So if you know, for a trader, it's so key that you said that, is like, you got to stick to the plan that you have. And there is a psychological sort of version that you need to then adopt and download in your brain to say, right, this is a psychology mindset that goes with my plan, you know.
That's exactly it. And like, that's what I help people with. So because, you know, I don't trade, so I'm never advising on the technical pieces. So it's always about helping someone to stick to their plan. And that's assuming that their plan is the right plan for the way that they're trading. You know, that's all assumed. And then what we're doing is helping you stick to it. So I think that's a really important point. So what we're talking about here is that we're trying to get rid of the urge. So there's no willpower, there's no need to put yourself in that negative space in order to stick to the plan. And the way we unlock that is we figure out exactly what is the script or the limiting belief that's playing in your subconscious mind that's creating the urge for you to stay in that trade when currently that's not your plan. So one example is a money mindset one. One example could be around, there could be a belief around you know, your trading results or your P&L being linked to its self-worth, or achievement being linked to its self-worth. So if somebody has the mindset, and a lot of people do, especially in trading, because it attracts people who are high achievers, you know, kind of a lot of perfectionists, people with that drive to really hit the top of whatever performance domain they're in. So if someone has a belief that I have to achieve in order to be a worthy person, in order to be loved, and this is so deep in their subconscious, it's not something that they're going to be articulating. Like, you're not walking around.
That's also closely associated with a closed mindset. If you're not first, you're last, sort of thing.
Exactly. Yeah, that fixed mindset.
And a good book to read about that is it Angela Duckworth's Mindset? Or I think there's a book called Mindset.
Is it Carol Dweck?
Oh, Carol Dweck. Yeah, that's right, Carol.
She talks about the fixed and growth mindset. So exactly, the fixed mindset is believing that like you have to be right, and you're born with that intelligence, or you're not. So you have to continually prove that you are, to reaffirm your sense of self. That's a fixed mindset. So you want to be in a growth mindset. So we want to move away from that. So that's another example of what could drive you to over focus on the P&L. So because if we boil it down, if you're trying to stay in a trade like that, it's with the hope of having a big win. Is that fair? Like, to say that it would be a focus on the P&L, like what would be the reason to be staying in there?
So in that, in a mean reversion strategy, you're basically, buying all sellers, and so you're kind of just trying to average into a really nice position that will, over time, the market will move back to a mean average price, somewhere like VWAP or above VWAP, depending on your time purview on the strategy, to then really win big. So think of like institutional positions across currency or commodity, for example. So they kind of try to hold a net average position of between 20 cents on oil, or maybe an average position of half a dollar or a dollar, as in like, an institution might say we're long oil 78.50 average, and we think it's going to go to 150. Everyone thinks it might go to 150, but you know what I mean. So that's kind of the strategy there.
So the incentive, and I'm going to pull this to you now. So again, we're going to keep it light enough so we're not dissecting your psyche, but let's talk about what might be the driver in your subconscious mind. Like, what is the potential benefit that your subconscious could see in staying in there? So is it that you could make a lot of money, or is it that you could make a lot of money when other people aren't? Like, that you are having not an edge, I don't want to confuse terms, but that is there an potential ego benefit there, where you did something that other people are not doing and you come out with a big win out of it?
For me, no, it's not the ego thing at all, because I like most traders, I don't actually post my trades, or here's a chart of me slamming a massive long or short in whatever market. I mean, I do sometimes, but it's not an ego thing. It was a mean reversion strategy on that book. Well, I mean, it was prescribed, and that was the strategy. So I suppose for me to then get comfortable with that strategy was the payoff. It was the financial, quite like you would be, because really the strategy would be, you would be pretty much 80% to max size long the market as it's then lifting back up towards price average on the day or the week or the month. And you're really gassing the P&L when you do that. It's like serious outsized returns as opposed to scalping sort of stuff,
So it's a financial return. And let me just, because we're going to split down a couple of different roads here. So there'll be some people that if they were watching this and identifying with it, there'll be some people that it is the ego thing. And I want to clarify, it's not ego in relation to other traders. When I'm saying ego, I mean, if you have a belief that I have to achieve and kind of show that I'm better than others to myself in order to feel like I've self-esteem. And again, this would be at such a deep level that you wouldn't be aware that this was happening consciously, then that might be the ego thing. So it's not that maybe you want to post your trades to other traders.
Yeah,
you derive a sense of self-worth from it, but we're ruling that out for you. So we're getting,
I think the most common driver for people who are martingale into markets coming against them or going up against them is the rejection of loss. They're not willing to accept the loss. So they're like, well, I don't exit the position, I haven't lost yet, and so there might be, I don't know what the motivation there is. Is that ego?
This is a really,
I don't
really
know.
common, and this could occur in lots of different situations. We're talking about one very specific situation, but people being afraid of
Mm.
loss and averse to it is huge issue for traders. So it could even be that it stops them from getting into a trade in the first place, or it can manifest in different ways.
Mm.
But let's say
Yeah.
it's not being willing to accept the loss. Then we're back to what significance are you placing on loss, and what are you telling yourself that says about you as a person? What is your significance that you're projecting onto loss? And if you can figure that out, then you're at the crux of what's happening in your subconscious. So I'll throw some examples out to make this clearer. Let's say again, if someone grew up in a family where they had to get really good grades, that's how they got approval, their parents had very high expectations of them, then loss is again a threat to your self-worth. It's like, oh, I'm not perfect, fixed mindset. So if you accept a loss and you have that belief, then you're telling yourself that it's no longer just about losing the money. It's actually, you're losing a chunk of your self-worth when you accept it, because you're accepting that you're not perfect. And that can conflict your belief that I have to be perfect in order to be a worthy person. So that when people are afraid to accept loss, that is one of the biggest subconscious kind of processes that's happening, is that they've projected some significance onto a loss that when they have to accept it, it's telling them something about themselves. So they're
Right.
personalizing
It doesn't just mean this is a bad trade. It means I am an idiot. I'm the
Exactly.
shittest trader that's ever walked the earth.
Yeah.
That's like
And
I'm
that's
such a loser. I can't believe I did this. It's like I can't tell anyone I did this. Like how could I put myself in this position?
exactly.
Yeah.
And people, like, that's such a common thing, that especially if you actually sat down and did the maths, or you look at the best traders in the world, like, they do accept losses. They have to. It's like, and you told me about this, that casino mindset where the casino it allows people to win on slot machines because it's part of the game plan. There's no casino manager
Yeah.
freaking out in the toilets when somebody wins on a slot machine and going, I'm going to lose my job, because it's part of the overall strategy.
If
So
anything, they're happy because it's great advertising for people to just keep on playing,
yeah, and they've built that,
and
like,
they
they've
only operate in a
strategically.
2.5% probability margin.
So
Or,
that's
yeah.
so they know that that's fine, because they know that over a longer period of time they're going to be profitable and successful. It's fine, it's part of the plan. It's the same in trading. You have to be able to accept losses. They're inevitable. You're going to have red days, and if you're stuck at the level of not being able to accept a loss, you're actually limiting the progression of your trading, because it has to be something that you're able to accept, so that you can accept them when you need to, exactly as you were saying. Like, you are actually managing to do that with the strategy, or I should say technique, not to confuse things. It's just that you're putting yourself in an uncomfortable position to stick to your plan. But what you're doing, or the urge then, if I'm getting this right, is that it's the fear of loss, and not being willing to accept loss, that is the subconscious piece that we need to work on. And that could be
Uh,
the case for a lot of people.
and I think the hang up for me, going out, moving out of the averaging or mean reversion strategy, the hang up that followed me over was I had to actually open up to being super comfortable with quite aggressive adverse price reaction. And so I think I opened up too much to that. And then I was like, oh, I could just go into, and I remember, like, in markets, because you get very comfortable with like big moves, and you're like, wow, it's moved like 80 cents against me. I'll just buy some more. And then within 10 minutes, it'll be back at par on the trade, like back at my average entry. And I'll be like, okay, I'll hold this for another couple of hours. And it made me overly comfortable with risk, with big risk, bigger risk than I was prior to trading that strategy, bigger risk than I was comfortable taking. And that really threw me for a loop, and also holding trades for really long amounts of time. Has, and I talked about this in the room. It actually screwed me up quite a bit when I really made a concerted effort over like 3 to 6 months to hold trades or like swing position trades, and the P&L swing would be huge. I don't mind talking about some of the figures, but like, I'd have like 8 to 10, 15 grand maybe swing to the upside. And then because I'm trying to hold a multi-day strategy, by the end of the day, that 15 grand would be down to like 150 or 200 or whatever quid, because the market got to a point, pulled back, and then should have gone again. But then it just came back to kind of the initial support area. And so that was something that was a feature of those 6 months that allowed me to, when I get in a really nice area and it takes a swing like that, I'm taking like 80% off of the table. And then I'm planning on it. I'm fully planning on it coming back to my entry and then proving the support again, say, and then go again. And I mean, the guys in the room know I tried this like probably 4 times, 5 times over the last 6 months on the euro, looking for a bottom on the euro. And the amount of times it lifted, a couple of times, not that many, significantly lifted, and then just came all the way back. And I just had to puke out, like. So there's a lot going on.
Is it like, if we think of this like the ingredients for a cake, let's say you're trying to make a chocolate cake, that was you in Australia, and there were specific ingredients and you had to have them at, X amount of water and X amount of eggs, whatever, to make the cake. But then now you've changed the recipe. You're trying to make, I don't know, muffins. But you're using the ingredients from the old recipe. So it's like you're,
right.
You have a tolerance, you've increased your tolerance to risk, but there's also an aversion to accepting a loss. And those two things combined are creating the urge. So you are managing it. We're just bringing that back. You are actually using a strategy or a technique to overcome this. But what's the piece that's happening in your subconscious is that you don't want to take the loss. And you also know you have this bigger tolerance to risk because you've kind of cultivated that. So that allows you nearly to even
it kind of makes it okay.
Ignore the fear of, you're like, but I know this works. I've done it before and I have this capacity for risk. So I'm not freaked out by it. So therefore those two ingredients combined are creating the tolerance or the kind of urge for you to stay in that trade. Is that right?
Yeah.
Okay. So then if we were to unpick it or to reverse that so that you could have a different technique to achieve the same end, which is following your rules, the piece that we would work on is, and we might not go to the level of depth, in this call as we would if we were doing it in one-to-one in a private sense, but it would be.
You'll have me talking about my mother now in a second.
That's session 2. No, I'm joking. So the piece.
My mother's a lovely lady, just for the record.
The piece that you would want to work on is what significance you project onto loss. What does it mean for you if you're taking a loss? And you would literally like journal that out, really take time to reflect on that. You might come up with a few beliefs that when you think about it, that you interpret loss to mean XYZ things about yourself over and above just the P&L. And if you can get to that level where you can articulate those statements so you can see those beliefs, then you can either work through challenging them. So usually they won't be true. They'll be things that you could objectively challenge and say, well, is that true? So for example, if I take a loss, it means I'm a failure. That could be a belief that's at play. So then you would say, well, is that true? Well, no, because actually, if I did the maths on it, back tested it, I can weather, I don't know, X amount of red days in a month, and I can still be hitting my profit targets in a month. So that actually is not true. I'm not a failure. It's just one snap.
And we saw that with one of our youngest traders who is funded. He's doing great. He did like 3 months training, and he's been with us for about a year now. And he just took a hit like a week ago, and I could tell he was really, really deflated. And I was just he was really, really bummed out. And I was like, listen, man, and it wasn't really that considerable a loss at all. But whatever way it hit him, he was just so deflated. And I was like, all I said to him was like, this bears no relevance to saying you're a good or a bad trader. This loss does not mean anything. It doesn't mean you're a bad trader. It does not mean you're an idiot. It doesn't mean anything like that. You just took a loss and that's it. And yeah, he's good now. Good now. He's back in a good place.
But that's it.
But
Sometimes
it's
it's
so
just the
funny,
perspective.
a loss, just everyone automatically goes, "Oh, the world is over. I'm an idiot. Maybe I should go back to flipping burgers." You know,
And
all that stuff.
it's like if you think of looking at different time charts when you're trading, it's the same kind of idea. If you look at this, time chart of this moment, this loss, it's like, oh my God, it's the worst thing in the world. I'm a failure, blah, blah, blah. But if you spread out that time chart, if we're talking about success on a month or a quarterly or an annual basis, like what would the significance of that loss be? Nothing. So it's about a shift in perspective. And so if we were talking about actual mental training tools that we could replace your technique of, traumatizing yourself to stick to your trading plan, what I would suggest is that first step, figuring out what loss means to you. And then second step, challenging it. So objectively looking at that and saying like, what parts of this are just my subconscious and what parts are like objectively true. And then the third step would be to reprogram that belief. And that's using affirmations, the best tool I can recommend for reprogramming your subconscious mind.
So I think with the, it's psychology and it's maths, really. I think that's kind of what trading is now to me. It's psychology and it's maths, and it's being really like, I understand where I am personally with my mathematical understanding of risk adjusted returns and on a trade by trade basis. And then where I am with my psychology on a moment to moment and a day to day and a week to week basis. But I had a session there with one of the mentees who's doing training at the moment, and we sat down and we talked about that maths piece. He's really good on the psychology. Like he's like stone cold killer. He just doesn't give a shit. He's out when he needs to be out. He doesn't carry overly huge risk. But on the maths piece, there's a lot to understand there of like, what's your book size? How much are you risking per day, per trade? How many contracts does that mean you can trade per trade? And on specifically on which markets, because 2 contracts in oil is not the same as 2 contracts in like DAX or the Bund or S&P. And so there was that missing piece there, the maths as well as that. So he's not missing so much on the psychology piece right now.
I think that's what I would always recommend to people is get that piece in first, like get the technical piece down, get the maths down, because once all of that's in place and you're really comfortable with it, it's habitual. You don't have to expend a lot of energy, thinking about that anymore because it's so fluid. That's when you
get a spreadsheet open, just put it down on a spreadsheet. Easy.
It's actually interesting how many traders haven't written down their rules, like physically written them down and written down their plan. They have it in their head, but it's not written down. So like if you do all that first and then you're experiencing challenges sticking to your plan, it's 100% a psychology issue. So if advice to traders starting out, like get the technical piece and the maths of it dialed in before you address the psychology piece. But then as soon as it is dialed in, that's when you want to address the psychology. You don't want to wait until you're experiencing issues to address it, because it's just another part of high performance.
So this is this kind of brings up the most common thing is people wade into the markets, they've done some training, maybe they've been taught a very simple edge, and they go in there and let's say they've got $5,000 and they just go, I think oil's going up, and I think we got really big miss on DOE there. I'm buying all size, full size in. I'm like 10 contracts. I don't need, well, you wouldn't get the mortgage for 10 contracts on $5,000, but like you're full size into oil. And then it comes against you like 40 ticks and bada bing, you're going to have to liquidate. And then they go, just blew my account. How did that happen? And then the absolute sting of the tail is oil does go up and it stops you out on the low. And I think that's very common, people they're blowing up accounts left, right, and center, and they're not doing that maths piece. And so that they're even further away from actually addressing the psychological piece, because now they're trying to address the maths piece and they're like, oh, the psychology, I'll deal with that later.
And they've actually created some psychology issues then, like you've got a hangover then because you've had a big loss. Suddenly that's weighing on you. Now you're thinking, I have to make up for that loss every time I enter the market now. And then you've created some issues on the psychology side. So like work on the technical, work on the maths, get on your risk, all of that, get that all sorted, and then address psychology. But don't wait. Like people wait too long, in my opinion, to address the mental edge side of it. And if you can, think of it as the next step in your training as a trader, once you've got all that other pieces or those other pieces in place, then the piece to work on is the psychology, because it's just part of your evolution. I think that people could save themselves a lot of money, time, and emotional capital if they approached it in that step-by-step manner.
Yeah, and I think that's why it really takes traders about 3 to 4 years to really start to come into their own, because they go through the anguish of, winning a lot maybe at the start and then bleeding it all back, and then maybe learning a more sophisticated edge and way to read the markets. Then they learn that. And then again, the psychology just pops out, but they're showing now more consistency, but yet then they're putting at risk more money maybe than they want to, or they're kind of telling themselves lies when the markets are kind of coming against them. And then they finally put their hands up and they go, really need to look at this, and at that point they know all the technical stuff, all the math, but there's just something lacking.
So hopefully, does that give you a sense of, when we pull all that conversation together, does that give you a sense of how you could approach the process of shifting from using this technique that's putting you in a negative emotional state to something that's more kind of
so basically I need someone to blow a dog whistle when
if that's what you took out of this
the
conversation.
Market's coming against me. No, but okay, so what are these practical steps now that I need to really think about my question marks and my fears around taking losses?
Yeah, because you want to shift it at the shift that you need to make is at the subconscious level. So then the urge won't be there anymore. If you address this properly at the subconscious level, the urge to stay in won't be there. Currently, the urge is there, but you're fighting it with a technique and it's working, but the urge is still there. So it's like you're fighting with yourself. The ideal state would be to work on it at the subconscious level, so the urge never presents itself. So you don't need to put yourself into those negative memories in order to manage it. So in order to address it at the deepest level, it's about shifting your perception of loss, what that means to you, and reprogramming your interpretation of loss. So the practical ways to do that: first, journal about what does loss mean to you. Then look at, the maths of it, just reinforcing the objective side of this and say, well, actually, I could take X amount of losses in a month and still be profitable. So you're just reinforcing, you're challenging this kind of flawed, biased belief. And then lastly, you're reprogramming the belief with affirmations. So you would create statements that program how you want to think about loss. So a loss is it's easy for me to accept losses because I know they're part of my overall game plan to win, or something like that. You would create these statements that reshape your relationship with loss and how you interpret it. And then you would listen to that as a script, day in, day out. And that's reprogramming it at the subconscious level. So then over time, that will erode that urge to, or dissolve the urge to stay in. And so then you don't have to use these kind of more band-aid strategies or techniques in order to fight it in the moment.
Fantastic. Tune in next time, where I think that's brilliant. I think that makes me think now of the other side of the coin, where I used to trade with this guy at SMB Capital, and this guy, and I couldn't get my head around this, and we both traded very similarly, but then psychology, we were like on two opposite sides of the world. He was like, he'd be like, that was a nice trade you took down there on oil or whatever. And I'd be like, thanks, man. And I was like, nice one on you. And he's like, and he said to me, how do you deal with the P&L when you've got a lot of P&L on the screen and the market could just pull back at any moment? Anything could happen. Like, how do you stay in the position? And I was like, what do you mean? Talk about it a bit more. And he's like, well, but, and we talked a bit and some stuff that you taught me as well. And he's like, well, I just feel really uncomfortable when the trades go on side, when I'm making money. He's like, that is the most uncomfortable thing for me. And we got into a little bit of, chat about it. And it blew my mind what actually the real cause was. So maybe we could talk about that next week.
Yeah, I love to. It's the complete opposite side of the coin. But
Yeah.
again, it is a common issue. It sounds counterintuitive, but it is. So maybe that's next week's session. So
cool. All right. Listen, thanks a million for your time. I'm going off to get a dog whistle and think happy thoughts. Was it? All right.
let me know how that works out. See you soon.
Cheers.